Hello and welcome to today's special pitch event and roundtable focused on FinTech. I am Cal Andonov and I'm delighted to be your host today along with Ken Gatz, founder and CEO of our partner and sponsor Proceeder. Welcome, Ken.
Hi, Kellyanne. How you doing?
Great. Excited to be here today. And we have four panelists along with us today from the world of corporate venture capital and of FinTech, of course. Jaidev Shergill, founder and president of Capital One Ventures, Oshri Kaplan, investment director at Munich Re Ventures, Jörg Lansch, head of corporate venture capital at Deutsche Bank, and Russ Kleeman, global leader at SE Ventures. So welcome, gentlemen. Delighted to have you all here for today's pitch session.
Thank you. Thank you for having us.
Absolute pleasure. Now let's have a look at the agenda for today. So I'm gonna first give a brief data overview on FinTech, and then we're gonna proceed with the pitch session, which Ken is going to lead and moderate. And towards the end, we're gonna have a roundtable discussion in which everyone is welcome to participate, and also a Q&A if we've got enough time. So I'm taking the opportunity to also remind everyone that you may submit whatever questions you have through the question function or through the chat function on Zoom. We'll try to get back to those, or to as many of those as we can. As usual, the usual sort of disclaimer that no part of today's presentation is to be construed as any sort of investment advice whatsoever under any shape or form. This is purely for informative purposes. A few words about us. We are a media company running two online business publications, two major business publications, Global Corporate Venturing, which, as the name properly suggests, focuses on corporate venture capital and deals, and Global University Venturing, which is focused on deals raised by startups coming from the world of academia. And in addition to that, we have other services that we run. One of them is the GCV Institute, which offers training for up-and-coming corporate venture units, and of course, the GCV Connect platform, which is powered by our partners Proceeder, with whom we've also partnered to do today's session, and we're delighted to co-host it. As most of you are probably aware, GCV is probably better known for the conferences and events that we put together focused on corporate venture capital pretty much all over the globe. As some of you know, we already restarted our flagship event, the GCVI Summit in California, this last September, and if COVID allows, the plan is to continue with it during its more or less regular time when we would normally do it. That's in February. Normally the event would bring 700 to 900 delegates together, but because of the pandemic and some possible restrictions and apprehensions that we may have, we have kept it at about 500 or so attendance. So do hurry up to pick up your tickets if you haven't already done so. With that said, let's jump a little bit into the data. This graph shows the deals backed by financial corporates, and we see that in both 2020 and 2021, they didn't really go down despite the shock of the pandemic. What's more, they actually registered an increase, and more significant this year than last year. And arguably, the pandemic probably gave a significant boost to some areas within FinTech. The same kind of story we see going on in terms of exits of financial corporates. In both 2020 and 2021, we saw them soaring, and this is clearly reflecting the effect of liquidity injections on public and private markets alike. In terms of the pure play fintech startups that have raised the corporate background, we see that in 2020 the numbers stayed for the most part flat despite the shock of the pandemic, and they took off during 2021, which is probably not surprising at this point. And some areas like payments more so than other areas. In terms of the funding initiatives where we've seen one or more corporates involved, they mostly stayed kind of flat in terms of the total committed capital that we've managed to estimate, although the number of initiatives did take off during this year, and we're yet to see how this is going to continue going into next year. And now in terms of the general trends within specific subsectors, here I've included some quotes from industry reports. So in terms of the banking sector, we saw that digital infrastructure is one of the big themes in that, as identified by Deloitte's latest report. The payment sector or subsector was turbocharged by the pandemic, as I already mentioned, and now a report by Capgemini estimates that almost 45% of all consumers around the globe are using mobile wallets for payment on a rather regular, frequent basis. Wealth management and personal finance, those areas were kind of disrupted even before the pandemic, with the emergence of robo-advisors, low-cost investment products, and low-cost brokerage services. Alternative lending, we've seen the rise of neobanks, and those neobanks and non-bank lenders trying to serve segments of the market that have been previously underserved, and they're particularly important in developing and emerging economies. And in terms of the insurance subsector, the vast majority of executives surveyed by the latest one of the latest polls done by Deloitte agreed that the industry was largely unprepared to weather the storm. So I'm hoping that we could discuss some of these trends further with the panelists later on after the pitches. So without further ado, I'm now going to hand over to Ken, who's going to present the 8 entrepreneurs who are pitching today, and they're all from a very diverse background, so it's really exciting. So without further ado, over to you, Ken.
Thanks, Kellyanne. Great. Well, welcome everyone to FinTech 2021. We've been doing these deal flow management and syndication deal flow opportunities for corporates throughout the last 12 or 14 months. We've seen over 600 companies come through. For this event, there was between 50 and 60 companies applied. We have 8 that are presenting today. Procedure is the official deal flow and syndication platform for global corporate venturing. All of these deals are coming through the platform, being sourced both from our early stage network of seed funds, angel groups, accelerators, as well as direct applications to the events themselves. As Kellyanne said, really exciting today. We are truly global. We've got companies from the United States, India, Africa, Switzerland, Canada, Spain. So really excited to get started. Our mission here is to connect corporates with these new sources of innovations through the platform. Both the companies that are presenting as well as the companies that were not selected to present will all be available on the Procedure GCV Connect platform after the event. Also, if you haven't signed up for the Slack channel, you can also access deal flow from the GCV Connect Slack channel. We can send that information on that as well. We just also want a quick announcement. Procedure has also just launched Deal Teams, which is deal flow management on Salesforce. So if you're using Salesforce, you can have the same power of Procedure within your Salesforce application. And with that, let's get started. Again, just a reminder, the The presenters, each of the startups will have 5 minutes to pitch. There'll be a 1 minute warning, and then there'll be about 2 to 3 minutes to ask questions afterwards. So with that, I'd like to introduce our first startup, Flutter Wave. Munya, floor is yours.
Thank you very much. I'm going to switch off my camera if you don't mind, just so I can save on some bandwidth. My name is Munya. I am the head of growth for Flutter Wave for the rest of Africa, and excited to be able to present to you. Flutter Wave is a Pan-African FinTech payments company. We believe in simplifying payments for endless possibilities. If you're a global business, one of the challenges that one would face across Africa is it's a very fragmented ecosystem, multiple currencies, 54 countries, multiple banks and different providers within the ecosystem. And so for us as Flutter Wave, we believe that we want Africa to feel like it's a country, even though there are 54 distinct nations within the continent. In a span of 5 years, Flutter Wave has built the largest payments infrastructure company by reach across Africa. What that really means is that we are the plumbing, we are the railroad that facilitates payments across Africa and across the globe. Today, we're active in 28 African countries. We're San Francisco headquarters, but we have our regional headquarters in Lagos, Nigeria, but really supporting the continent from a geographical footprint perspective. This again provides a picture of what our footprint looks like. We're active again in 28 African markets. What this means for a business is we are able to do both collections in local currency and then disbursements in local currency, in addition to providing global payment methods across the world. Our unique value proposition really comes down to our common API infrastructure. What this means is that if you're a global business, you can plug into our API. We offer your traditional card network capabilities, but more importantly, and this was referenced early on, is that mobile money, mobile wallets is the predominant payment method that you find across Africa. And so Flutter Wave is able to offer that to our clients. In addition to that, we are all able to offer some alternative wallets, such as PayPal. We're able to power 400 million PayPal users through a Flutter Wave checkout experience. We're excited to have more than 390,000 businesses that really rely on our infrastructure, 140 million transactions, and again, a significant 9 billion transaction processing value that has gone through our infrastructure. We're also very excited to be able to have global merchants, which is why we're here today, is that we want to be able to power more and more enterprise businesses from Facebook, Microsoft, Uber, that are really relying on our infrastructure to be able to move money across Africa and across the world. We're backed by some amazing investors. We really are excited about their support in terms of being able to work with us and across our journey. The use case, and I'll just reference Uber, is we work with Uber across 8 African markets. We power the payments, whether it's card payments, mobile money payments. We also support the payout network. So if an Uber driver needs to get paid, those payments are coming through our infrastructure. And that's all done within the Flutter Wave ecosystem. And then to close, for us, it's important to have individuals think and corporates think about why Africa is important. It has 8 of the 10 largest, fastest growing economies in the world. It's got a significant rising middle class. There's a growing connectivity, and particularly this has been powered and probably even more important during COVID, where people are no longer going to physical locations to be able to transact. And again, we've seen an increased stability across Africa. And let me close by saying that Flutter Wave is here to support global merchants and businesses that want to do business across Africa. And this is why we're here. And we're here to ask for extended partnerships and relationships that will facilitate any businesses that are looking to do business across Africa. Thank you very much.
Questions from the panel?
So first of all, maybe congrats on what you have built. I think it's truly it's really significant and impressive. And I think you have unicorn status, right? So it's and obviously a great investor base. In terms of if you could maybe touch base on two things. One is competition in terms of what kind of alternatives would you say are your biggest competitors in Africa? And the second one, I would be interested in how you deal with FX, if you do it by your own, or if that's something which where someone else is plugged in terms of helping you with the different currencies. I think if I saw it correctly, you have many currencies on your platform.
Thank you very much. Two great questions. I would say that the biggest competitor is cash. When you look at the Africa ecosystem, I would say that from a competitive perspective, I would say that cash continues to be where we are seeing the idea is changing behavior, right? And I think we've seen an acceleration of that due to COVID. I would also say that on a global scale, we are finding that banks play a part, but we believe in partnership with banks. Banks are a critical part of our ecosystem. And what's interesting is when we talk about infrastructure, it's critical to think about the fact that Flutter Wave is powering other payment services providers. Like we power, like for example, WorldPay is just one example of that. We have a strong partnership with PayPal. So we are happy for partnerships because when you look at the Africa footprint and the need to reach 54 countries, there's no one individual sort of institution that can do that. And so for us, we believe in partnerships in terms of being able to support our customers. Your second question about FX is that we are a regulated business. So in markets, we do have either payment services license or remittance license that permits us to be able to move FX globally across the world. We also leverage on great banking partnerships. One of the slides I mentioned was we have 90 banking acquiring relationships globally that allow us to move significant FX and work with our customers based on their FX needs.
Thank you.
Great. Great presentation, Munya. And if there's any other questions?
Yeah, just a quick one. Munya, can you just talk about your existing margins and where you see that going over time?
Yes, so our view on margins is that it's critical to keep in consideration that every single African market is different. When you look at Nigeria, the component of margins are everything around regulatory environment, volume, reach. So there's a lot of different components to that. So what you'll find is that we tend to look at it from a sort of a blended view, which is that every single market across Africa has a very unique nuance in terms of what the individual processing capabilities are, or what we need to do within those markets, either to collect funds or to disperse funds across those markets. So it's really, from our perspective, quite unique by market when it comes to sort of what those margins look like.
Do you think they'll, understanding that this, the infrastructure is relatively new to market over there, so people might be willing to kind of pay more at this point? Do you think with, over time with increased competition and, some of the banks also kind of, I suspect, wanting a piece of the action over there, that you will see margin compression?
Look, I think that the key thing is that, we're active in 28 African markets. The key thing for us is when we talk to our customers, it's about the global reach, right? It's not about an individual market. So for example, when you look at our geographical reach, is that it allows us then as a company really to be able to work with our customers. And even from a regulatory perspective, we work in some very challenging regulatory environments, even for example, Nigeria, where it's extremely challenging to be able to move money in and out of the country. But for us, we've got the regulatory licenses to be able to support that business. So our view is not about margins, it's really about how do we, and even competition, how do we just help our global merchants? And that's our key constituency is businesses that are looking to scale across Africa in a cost-effective manner. In some instances, they don't have to register in every single country. That's our heavy lifting that we do. So we're less concerned about the competition. It's really more about how do we provide services and enable global merchants and businesses that want to scale quickly across the continent.
Great. Thank you so much, Munya. Next up, we have Iffy from Herconomy.
Hello, everyone. Good afternoon. I'm super excited to be here talking to you guys. I'm going to follow Monia's precedence. So I'm going to turn off my camera while I'm doing the presentation, and then I'll share my screen so that it's not going up and down. Okay, so my mom is a lawyer by profession, and as soon as she started having children, she put her career on the back burner and focused on looking after her family. When we were old enough, she wanted to start a business, and then she realized that she had no savings at all, so she couldn't make any meaningful financial contribution. This situation is not peculiar to my mom alone. It is typical for most African women not to have bank accounts. According to the IMF, only 37% of women in sub-Saharan Africa have access to bank accounts, and almost none of them have any savings. So unfortunately, economic benefits are not reaching Nigerian women. They are 25% less likely to participate in the labor force, and even when they do, 75% of them don't get paid the same amount, even though they're in the same position as men. So women are losing out on opportunities because they lack access to resources that will help to build their capacity, earn more, or make sound investments. To solve these, we have built Herconomy, a community for empowered women combined with a financial platform to level the playing field. On the community side, we facilitate capacity building sessions to help members access jobs, grants, and other resources that they need. The financial platform consists of two interrelated and complementary components. First, through a unique partnership, we offer special bank accounts with lower fees and better rates so that women can earn higher interest on their savings. We also host regular savings challenges to encourage women to compete with each other. Also, we have developed partnerships that give our members up to 30% discounts on products and services that women need to thrive on a day-to-day. And these products are lifestyle products, salons, to restaurants, to consultants, to car dealerships, to airlines. We have a plethora of local and global brands within our ecosystem. So in the economy, women can pretty much connect, earn, save, and thrive. And we have a multi-pronged revenue model. On the community side, we use a freemium model with 3 premium partnership tiers, and we also have earned 2% interest on commission on people who save with us. We also generate revenue through ads. And since we launched our app in December 2020, we have over 15,000 members who have joined our platform and over 60 local and global brands. We are currently in the pilot phase for a significantly enhanced savings feature. And when the word leaked out, we realized that we had over 1,600 members on our wait list. This is just a picture of the different brands which are within our platform. Also, there's a huge opportunity for people within our community. Nigeria also has the highest number of unbanked people in Nigeria, and 66 million of that number are all women. So there's a huge market size. We have a solid team of fantastic people within our network. I'm the CEO. I'm renowned for my youth empowerment efforts, and this had led me to working with the likes of the World Bank, and I was also nominated as a Peace Scholar of the Dutch Ministry of Foreign Affairs. I'm also excited to announce that we recently signed a partnership with Amazon as the first recruitment partner in Nigeria. So if you're looking to deepen your diversity and inclusion efforts by hiring more women on your team, please reach out to us. If you're looking to raise brand awareness for your products and services with inspiring and influential women, please reach out to us. We are currently raising a round of $2 million to process our MFB license, that's the microfinance bank license. And if you know any investors who would likely bring this vision to life, please reach out to us. We believe that the only way women can be empowered is through capacity building, an amazing network, and financial services. So welcome to the economy. Thank you.
Thank you, Ife. Great presentation. Questions for Ife?
Yeah, first question. What's your primary go-to-market strategy in terms of trying to reach customers within the marketplace?
So right now we leverage social media very well, and we're also currently building an agent network so that they can go to the unbanked, like into markets, to reach out to women who necessarily don't have access to bank accounts, but they usually trade every day. So we have like mobile wallets that we are building on our platform where they can save every day and earn up to 10% interest.
Maybe you can elaborate more.
And also, just to add, we also have, because we started out first as a community, we also have a base of, over 15,000 women, like I mentioned earlier. So that's our first, target of people who are going to be saving with us.
Maybe can you elaborate more on the business model itself? I understand the community element of this. Can you tell more about the 2% of the members? Or I think you have one slide on this. Maybe you can give us a bit more details on that.
Okay, basically how we've done it, because we only have a cooperative license, which allows us to accept money from the public, but banking operations, we're not licensed to do that. So we've partnered with a bank, Providence Bank here in Nigeria, and all the money is going to be kept with them. And we have a partnership agreement where we earn 2% interest on all the money that is saved within the bank through our own platform. Also, in addition to that, we're also speaking to other investment organizations that once we have a pool of money, we'll be able to invest more and earn even higher interest on that. Thanks.
Thank you so much, Effie. Great presentation and great to meet you. Next up, we have.
But by the way, just really quick, I was just Googling, and congrats on doing the $600,000 raise in a day.
Thank you. Thank you. Thank you very much. Yeah, that was exciting.
Very impressive.
Thank you.
Next up, we have Kaleido Fin, Krithika.
Is it visible? Hi, this is Krithika from India, part of Kaleido Fin, which is a neobank that primarily focuses on the customer segment, which is totally informal, unbanked, and underbanked. Proud to say that we are the first digital neobank focusing on the 600 million population falling into this underbanked segment of customers. What we try and do here is focus on building up the product, which we started in the year 2017. This is about 4 years ago, with a flagship offering of goal-based intuitive financial solution. What we tried and did over here is to meet out these informal segment of customers who otherwise are saving in a very different informal channel modes that were not secured or safe. While India has been growing on the digital path with many support from the microfinance institution dealing with such rural customers, where many bank accounts have been opened, but not many of the bank accounts are given the right awareness to these customers to actually start using these accounts effectively. So we wanted to kind of bring in a product which is attached to a particular life goal of a customer, so that kind of is intuitive for the person to start saving, by bringing in the convenience feature of an informal channel as well as a secured security feature of a formalized channel, which is typically from your banks and other financial institution. What we have achieved in the last 3 years, especially in the goals where all these B2B2C partnership model that we usually take to reach out to these customers, has been that an average savings that kind of touched over Indian rupees 8,000. In a normal scenario, you see them maintaining a very bare minimum balance with multiple charges being attached to them of non-maintenance. So they maintain only to the extent of the payment of loans, or if any subsidy are credited to the account. It's only from that perspective an account has been kind of registered in their mindset. By giving this flexibility features and the convenience features, this particular platform, which invests in low risk mutual funds that is decided by the machine learning algorithm persona mapping that is in-house developed by Kaleido Fin, we were able to achieve this average balance per customer reaching up to 8,000 and up and onwards. And that is one of a significant achievement. And from there, what we did is to use and leverage the savings data of these various customers from across financial institutions that we are dealing with. We built up a credit scoring model, which we call it as Chi-Score, the ML-based automated credit underwriting platform, which not only uses the pure transactional historical data that a particular institution has for underwriting, but also the other data such as the savings behavior from this particular platform, the alternative aggregative data. Today, multiple banks have started plugging onto the platform to know about the different savings bank account and behavior across Indian banks, and the telecom data, which is getting again aggregated to an account aggregator platform. By integrating ourselves with these various platforms and using the strong demographic data, also the credit bureau scores, which are our partial competitor, we would say, in the space of credit underwriting. We saw this particular model significantly develop and meeting this microfinance, the small ticket micro enterprises loan segment. The sweet spot being up to Indian rupee 10,000 to almost up to 2 lakh rupees kind of a segment of loans.
And Kritika, your slides are not changing. I don't know if you're changing.
Sorry. I'm just moving to the key slides towards the end to just show our key proposition in terms of what all these products are kind of interlinked, is that we try and incorporate this savings behavior as well as a credit model to achieve that underwriting decision for the various originators, thereby increasing the different objectives for various financial institutions, whatever objectives they want to achieve. We kind of customize the model. This is a model in-house built, just using the available data that these people collect while during the loan application form, and showing the efficacy of over 75%. And expanding the same use case, we have started reaching out to capital market transaction using Chi-Score as an additional risk filtration proposition. And we have now also entered into the credit side, where we want to put in the skin in the game while dealing with the platform. On one side, having the originators who don't have enough capital to get the right lender, and on the lender on the other side who don't have the wherewithal to link with multiple integration to different originators. We come as a unified platform where we'll have both the side of parties kind of have a one single window integration platform using these Chi-Score, KaleidoPay, which is a digital payment model, and the credit goals, thereby giving them the right target segment or right way of growing their business. This is both on the investor side.
Kritika, thank you. Just as a note, your Kritika's slides were not progressing through here, but her deck is available on the GCV Connect platform, so you can review the whole deck there.
My apologies. Okay, sorry, it was moving here. Sorry, I'm so sorry about it. Yeah.
No worries, no worries. So it's available there. We'll also be sending it through the Slack channel, so everyone will get to see the deck in full. But any questions for Kritika?
Yeah, quick question. The neobank space in India is quite crowded with a lot of different players in the space. How are you looking to differentiate your offering within the market?
Just to mention over here, we also have the first mover advantage, because while there are multiple neobanks featuring on the payment side and on the credit side, what we took as a challenge was to first focus on the saving side, bring them the formalized way of saving behavior. We as a neobank were the only neobank which started with focus on the complete informal segment customers with a partnership model. And thereby, we were able to kind of develop even this credit underwriting platform, not just scoring, but something which is beyond the scoring of incorporating all the data available. We believe we had the first mover advantage in both these segments, having understood the informal segment, because both the founders of the company have over 15 years of experience only in the financial inclusion space, have understood the problems faced by these customers. And we took this partnership model. I think that's where we kind of differentiated ourselves, by taking the savings behavior instead of going into the direct credit route, which a lot of neobanks today entered into.
Could you, and thank you for that. I think it's a great and very important topic, obviously. Could you share a little bit of light in terms of the size, so number of clients, assets which you have on your platform? And the second part, which I would be interested in, is a lot are starting as well with financial literature in terms of to give the unbanked as well the opportunity in terms of understanding what kind of these products are. Would be interested in terms of if you are providing something like that as well on your neobank offering, or is it more a product offering?
we focus on the product offering, but there's a lot of awareness build and nudging that goes, especially the first offering, which is the goals, where we started. It is not just offering this product. We took an assisted approach because most of these customers are not even smartphone savvy. So we had an agent approach and meeting through the partners who deal with these customers. We did a continuous awareness program. A customer engagement is a very key thing in developing these goals. That's precisely where this average balance also increased, because they actually saw us continuously nudging them, even through the pandemic, where we did not see a drop fall. Second, in terms of the numbers that you had asked, on the customer overall pool that across these 40 institutions from large NBFCs to NGOs, we have over 10 million customer base access through this platform, of which the savings customers actively are using is about over 2 lakh customers who are actively saving using the Goals platform. On the Chi-Score credit underwriting, which went live in the last 15 months, have onboarded 9 financial institutions ranging from microfinance to the small retail loan customer NBFCs. And across these 9 financial institutions, we have underwritten over Indian rupees 5,000 crores of loans in the last 12 months, and covering pretty much the entire geographical region within India, north, east, west, and south. And with respect to the size of the customer profile, again over here is 12.5 million customer base within the Chi-Score that we have access to in terms of the reach. These are the numbers currently within these 2 products. And the other products are more like subsidiary one, Kaleido Pay, which is like a digital payment offering that we built for in-house voluntary saving, which we kind of made it as a plug and play model to the external partners, especially in the pandemic when they did not have the reachability to the customer.
Great. Well, thank you so much. Great presentation. And again, the full deck will be available on the platform for review. Thank you. Next up, we have Ann Stattler from Lockdocs. Ann?
Ah, perfect. Then you can see my screen now. Hi, I'm Anne-Marie Stattler, CEO of Lockdocs. Lockdocs is a digital identity as a service platform for financial services sector. We are transforming how financial services providers collect and manage their customer data by offering a frictionless customer experience and generating significant cost savings in the process. Financial institutions around the world spend hundreds of billions of dollars every year on compliance, including know your customer and anti-money laundering activities. How effectively financial institutions manage regulations has become a key driver for value creation or destruction. Collecting and maintaining customer data is time-consuming and expensive. While digital solutions are slowly evolving, financial institutions tend to solve the problem by focusing on a digital interaction that's one-to-one, meaning between the financial institution and the customer. That means, though, that there's no common platform that the customer can use. We are focused on solving the problem by looking really at a customer-centric experience. So customers, first off, hate filling out forms. It's hard to keep track of who's got their data. And it's very frustrating to pull out the same data time and time again for purposes of onboarding with different providers and for different services. And then once you are a customer, when something changes, like you move, it's a frustrating process where you manually have to contact everybody to let them know your account's been updated. So we are solving this problem by empowering customers to control, own, and manage their universal identity. Customers can share data using consent, and financial institutions are able to collect data in whatever format they require, along with a full audit trail. Under this model, customers can share updates with the click of a button to all their financial institutions. And another huge benefit of the platform is that it enables this idea of evergreen compliance. So for example, with the Lockdocs platform, a customer can upload the latest copy of his or her passport and share that with financial institutions so they can access current documentation rather than the documentation that was received when the client first onboarded with that financial institution. And I've got a brief video to share with you about how the platform works.
Lockdocs is a digital identity as a service platform for the financial services sector. Here's more information on how it works. A Lockdoc is a customizable package that can include both forms and supporting documentation requests. Choose from a pre-configured package or easily modify templates on the fly. Smart form configuration and input validation rules increase data accuracy. Automatically flag exceptions or deviations in completed forms for your review. Built-in project management tools provide an effortless workflow, track statuses, follow up with claims, and export project data with ease. Sending a Lockdoc takes just a few clicks. Simplify your onboarding process or complete ongoing compliance requests. Complete your entire project sequence simply and securely through the Lockdocs platform, from initial data request to final document execution through a partnership with DocuSign.
All right, so from a customer acquisition strategy, we are first focusing on the $10 trillion alternative asset space. In this space, the workflow is still completed manually, and it's got a global user base in terms of the investors, comprised of high net worth investors, along with institutional investors. It's our belief that once customers get used to doing things this way, saving them tons of time, they're not going to want to go back to the old way of doing things. Over time, we plan to expand into other use cases. For example, mortgages, insurance, or wealth management are all perfect use cases where a ton of data is required for underwriting purposes. So perfect examples where the Lockdocs platform can add tons of efficiency for both the consumer of the service and for the financial institution. As to our stage of evolution, we're currently pre-revenue and are ready to launch by next March. We filed some provisional patents, and we're pretty excited to get some pilots going with customers. And then once the proof of concept is validated, we're really looking to partner with strategic type of players that can help us quickly establish a dominant market position, because we think there's a great opportunity to become a market standard platform, first in the alternative space, and then to expand beyond that. Thank you very much.
Thank you, Anne-Marie. Questions or comments for Anne-Marie?
I actually have many questions. First of all, it's a topic which is top of many people's mind at banks. So it's very relevant. So just to double check, is my understanding correct? It's for private customers, so you don't do the KYC or data collection for corporations, which obviously is a different data set. Secondly, in terms of jurisdiction, would be interested in terms of your thought in terms of where to do the POC. And lastly, in terms of the model, there obviously there's as well the consortia model in terms of approach, which was tried in that space before. Would be interested in if you are as well going into that route, or if you're not looking for consortia bank approach in that area.
Okay, so hopefully I remember all these questions. So to start out with, the platform is intended to accommodate both individual users and corporate users. In that context, it could be really any kind of legal entity. And the idea is that you can have multiple personas under your account so that you can easily track all the entities you need to track. And if you're an individual, you might have your dependent children or an investment trust and so on under your profile. That's all easily available to you when you want to share them. From a proof of concept perspective, so I'm based in Canada, and so I've actually worked in the private equity space for about 15 years. And so the initial customers that I'm talking to are in Toronto and New York, but I also have relationships outside of Europe. It's interesting from a user base perspective, because as you might know, the investor set is global for this. And so I have to deal with sort of, privacy laws around the world and compliance and so on under that model as well. And the last question about the consortium, I'm not 100% sure what you're referring to. I've read about a few different initiatives, let's say for sharing KYC data. I think what's exciting about our model in particular is that because the customer is in the center of this, it solves a lot of problems that banks otherwise would face. Even if they have multinational operations, they can't necessarily share that same data that they might have obtained in one jurisdiction with another jurisdiction. And in our model, it's really all customer consent driven. And so once that data is there and they've provided consent, they're really at the center of the spoke to be able to share data with third parties.
Great. Any additional questions for Anne-Marie?
One from me, if I may. I'm just curious if you could give us a little bit more light on how you plan on monetizing, because you mentioned you're still pre-revenue. You also mentioned that you're our identity as a service company. So would it be a sort of a subscription? Would it be on a per transaction, if you may call it that, or per sign up kind of basis, or how's that work?
Absolutely. So the answer is a combination of both. So we, in the private equity use case, we charge the private equity firm for using the platform, and there's a combination of a usage-based fee per subscription, but then there's also a fee every month for the ongoing network access. From an investor or customer perspective, that account is going to be free for them to start with. But over time, we will be introducing a bunch of premium features so that we can introduce a freemium subscription model. And so, for instance, as I've been talking to customers, workflow management is sort of is one where there's a lot of value add for customers to be able to just better manage how things get done. And so there's tons of opportunity once we've got those customers to add all kinds of features that enhance functionality even more.
Got it. Thank you.
Great. Well, thank you so much, Anne-Marie. Next up is Christopher Bullen with Proven PCI.
Thanks, I appreciate it. My name is Christopher Bullen, and I'm with Proven PCI. So our target market is the small medium business market, which is typically underserved and underprotected, and under-resourced when it comes to cybersecurity tools. So if you don't know what PCI is cybersecurity best practices when it comes to credit card data. Currently in the market, when it comes to small businesses, there is no plug and go solution for small businesses. They currently have to rely on enterprise solutions, and it's just too costly. Currently, as it sits, the payment card industry compliance software marketplace will reach an estimated 43.76 billion by 2025. Currently in the market, the breaches are the number one thing that everybody's talking about. But when it comes to small, medium businesses, they are the target market. They make up typically, I think, 99% of the 50%, I'm sorry, of the population in regards to GDP and so forth. So small businesses, they're under-resourced, and that's where a lot of the breaches are coming from, because they don't know, they don't understand, and quite honestly, they struggle with getting compliant. 94% of attackers target credit card data, and the average cost of an actual data breach to a small business is about $150K. Which could definitely shut their doors. So our solution is an all-in-one cybersecurity tool. It's geared to help small and medium businesses easily meet the requirements for PCI related to the protection of credit card data. With our proprietary software combined with our automation, we can deliver a simple and affordable solution. This offers continuous compliance, along with, as opposed to the current solution, which is just an annual snapshot. So what we've done is we've done PCI in a box. It is an all-in-one solution. It includes everything that a small business owner would ever need to meet the requirements of PCI. And instead of just checking a box to meet compliance currently as it stands, our system automates the tools in order and meets the requirement automatically. So we can provide proof that the actual requirement is in place. Current market opportunity, like I said, $44 billion. We estimate within the first 2 to 3 years, we should hit 835 million. And our target market is the ISOs, the independent sales organizations, merchant service providers, PayFacs, and banks, because they bill essentially the merchants on the back end. My competitors are some of your big ones, right? They're Trust Wave, Control Scan, Security Metrics. And the reason they're competitive of ours is because they have the SAQ wizard to help merchants through PCI compliance, but then they also offer a managed security service provider on their back end to sell their upgraded services. We're an all-in-one solution, and a no response cannot be recorded within our system. Every client and every merchant will become compliant based on going through our process. We have a licensing, that's how our revenue stream is set. We license to the ISOs, the MSPs, and the banks based on the number of merchants that they have on their books. The average merchant or the average ISO or MSP in the market runs about 2,000 merchants on their books, which is at $29.95 yields about $750,000 in revenue a year per ISO. This is our team. I've got 20 years in the payments industry. I came from being an agent in the field. My co-founders are Josh Benedetti. He also has a couple of years in the payments industry. He also runs an ISO. We have Jeff Mann, who's an advisor with PCI. He actually helped create the first inception when it came to Trust Wave, when it started 18 years ago. Currently, we're seeking $2 million in funding, but also with partnerships. This would give us a 2-year runway and double our current size of capacity for our employees, and also for our marketing strategy. Thank you.
Thank you, Christopher. Great presentation. Questions for Christopher?
Christopher, you mentioned automation in the product. Can you explain again where the ease of use and as a small and medium business, how am I going to actually use this product?
Yeah, so we've built a web application and a desktop application currently as it stands. And so when the clients literally log in, they're tasked with things to do, which are the actual requirements, right? So one of them is, let's say, it's a scheduler, right? And it actually schedules the patches. So it's just they click a button and they're patch their entire system. Because the way PCI is currently done, they go through an SAQ wizard and then they have to go out either hire an MSP company or they're just checking a box to meet the compliance of the banks. So there's no proof to anything's actually being put in place right now. Does that help answer it a little bit?
Yeah, got it.
Hey, can you chat a little bit about your go-to-market strategy, both from how do you intend to sell to the SMBs and what your overall kind of CAC assumptions are over time?
Yeah, so right now we are pre-revenue. We are starting testing with, so Josh is my partner. He also runs an ISO out of Las Vegas. And so we're going to start with boarding some of his clients in regards to things starting in January. That will be revenue. And then from there, I'm actually running a demo with probably about a half dozen different ISOs that can make a decision regarding their current PCI provider. And then we're going to target it that way. I've been in the payments industry for 20 plus years. So it's more of connecting with the other ISOs, seeing who can make the decision and who can change their provider. And then for billing purposes, they would do the billing, right? The processor does the billing to the merchant. So we would license to the ISO and then the ISO would bill their merchant and they can mark up from there.
Great. Well, Christopher, thank you so much. Next up, we have Satapan Chakraborty, if I'm saying it right, with Synect.
Hello, everybody. I hope you can see my screen. So we are Synect, and we create virtual ATMs that brings the power of sharing economy into cash logistics and cash distribution. Now, you might recognize these machines, which were invented almost 60 years ago. And since then, not much of an innovation has gone into this space. They were invented to reduce the cost of a bank branch. And now banks are talking about what can we do to reduce the cost of an ATM? Because the entire cash infrastructure is very expensive. From central banks to commercial banks to consumers to retailers, it costs a tiny country like Switzerland 2.3 billion Swiss franc every year to recirculate cash. Globally, it is a $300 billion market even today. As cash usage continues to decline, maintaining existing ATM infrastructure is becoming even more expensive. And that's why we have created a location-based matchmaking platform that connects those who want to withdraw cash in real time with those who want to deposit cash, which typically is a local shop owner, like a bakery, pizzeria, or a corner store. So imagine Uber in the context of cash withdrawal. What you end up with is Synect. By doing this, retailers can not only reduce their cash management effort, but also earn commission. It also attracts additional foot traffic to the store. You as a consumer can now withdraw cash at the click of a button wherever you are. And finally, banks can save up to 50% in running their ATM operations. Here is how it works. It's a simple mobile application. Request how much you want to withdraw. We debit your bank account and produce a barcode. Then you click show me where I can go. And our location-based search algorithm kicks in to find retailers for you that can give you the cash right there, right at that very moment. You take the barcode to the cashier, they scan it, and hand out cash directly from the till, just like you'd get it from an ATM. Banks become our customers and distribute the product to their clients. Besides the setup fee and a license fee, our primary revenue model is transaction-based, and we share a portion of that transaction fee with the retailers. This way, the retailers make money, banks save money, and we take a cut in the middle. Everybody wins. We launched with our first customer exactly 3 years ago, and within just 18 months of our operation, we have become the single largest ATM network operator in the country with over 2,300 locations. We have more than 350,000 users on our platform, and our gross transaction value has grown over 1,600% since the beginning of this year. And that is mainly because every single major Swiss bank in Switzerland, like UBS, Credit Suisse, and many others, started to offer our service to their customers this year. But we didn't stop there. We already ran a pilot successfully in UK, and our customer, UK Finance, was very happy to scale further in UK, and are in the process of setting up our base in Mexico for further expansion in Latin America. Various other markets in Europe are also being prepared, but we are very proud to announce that we are about to launch with our largest customer, BNP Paribas, in Italy within the next few months. We are going to deploy a 20 times larger network in Italy with 40,000 virtual ATMs. And the use case that BNP Paribas is looking at is to optimize their physical presence of bank branches and ATM and complement it with our virtual ATM network to reduce their overall operational cost. Such a fast growth wouldn't have been possible without our strategic investors like Loomis, one of the largest cash management company globally, and Arca Continental, one of the largest Coca-Cola distributor globally. They not only invested, but also are helping us scale in their respective markets with their own customer base. For example, we are soon launching a new product which would allow even a small retailer to deposit cash at a large retailer, potentially replacing a bank branches. So if you're a retail bank or run a retail network and want to reduce your cost of cash handling, please feel free to get in touch as we are constantly expanding in our virtual ATM network in various markets. We do have multiple corporate investors on our cap table, including some major banks in Europe, and we are currently doing our Series B. This might be another opportunity for you to join our journey as we scale the business internationally. So what are you waiting for? Come join our journey. Let's revolutionize the ATM industry as we know it today. Thank you.
Great, thank you, Satapan. Questions for Satapan?
What is the cost of transaction? So if I'm in Switzerland and I would like to withdraw 100 Swiss franc, what do I need to pay?
Yeah, so typically the customers pay 2 Swiss franc if they have to use any other bank's ATM. That's the interchange fee. That's the standard almost across Europe. And we charge our customers half of it. So we charge them 1 Swiss franc and we split it 3-way. 1/3 goes to the bank, 1/3 goes to the retailer, and 1/3 comes back to us. So the consumers pays half of their current cost, and the bank sees this as a revenue opportunity while optimizing the cost base of ATM.
And how many transactions have you seen this year, just to get an idea of the...
Yeah, so we are currently doing tens of thousands at the moment, and we are growing 20% month over month.
Okay. So the revenues out of it would be some 40, 50,000?
No, so last year we did 500,000. This year we're getting close to 1 million.
Can you talk about when you sell this to banks, what kind of overall, you've got the revenue side of the equation on one side, but you also talk about cost optimization. How big is that? What's your sale? What's your kind of selling proposition to the banks to save that money?
Yeah, so what the banks look at is they rank their physical ATMs, and not every locations are profitable. There are some prime locations where they earn money from the ATMs, and there are some locations where they lose money, especially in remote regions. So what we do, we basically replace those remote region ATMs with our solutions. And that's how the banks kind of transition. They push their customers to our solutions as well, such that they can pull the plug of those loss-making ATMs.
Got it. So on average, how much do you think they'll end up saving as a percentage of the ATM network cost?
So each ATM costs in Europe about 30 grand a year, and the capex amortized is another 50 grand. So if you pull the plug on single ATM, we're looking at 80,000 cost saving per ATM reduced.
Got it. Okay. And have you taken into consideration, as the banks kind of do this modeling, there'll be a broader implication, right, of potentially losing some customers as well because you take away that depository kind of ability. Have you seen banks actually shut down ATMs, or are they just using this as a, and solution versus an either or?
So we are in a transition phase as we speak. We know some of the banks are planning to shut down, but our largest customer, BNP Paribas, when they launch, they want to launch it by shutting down some ATMs. So they want to take even a bolder step that it's not a complementing solution. I'm shutting down the ATM, and here is your alternate solution available.
Thank you.
Great. Thank you so much, Sadapan. Next up, we have Antonio with Buniverse.
Hello, how are you doing? I'm beyond thrilled to be here presenting the company Buniverse. Buniverse is a fintech company, so we're building the next generation cashback solution. But the cashbacks, mainly the core of our cashbacks today is the tax-free, the VAT refund. But of course, we are also complementing with other kind of cashbacks. If you analyze the market right now, so you see two big players, but Global Blue and Planet, but they are not digital. Even if they say they are, it's not. They're not digital. They're analogic. They're not only mobile. They didn't compress all the red tape, all the bureaucracy of this industry in front of the travel shoppers coming from different fiscal areas. They're stuck in the 80s. As a consequence of that, so if you use the old-fashioned and classic operators, you're lining up, you're facing bureaucracy, and as a consequence, only 30% of travelers claim a VAT refund, especially the Chinese people, because its culture is like, okay, these people is torturing us, but it's our money, so we're going to use this service because it's the only thing we can use until the arrival of Buniverse. That's for sure. So here you see the old tax-free business model, which is 90 minutes on average, and with Buniverse is 15 minutes. It's in 3 clicks, you get your money back. So using we have the best OCR of the market because we have developed around algorithms customized according to this specific industry. So we have 95 success rate with our OCR when people is scanning the receipts, the invoice, scanning the passport, and then we make everything backend. They don't see anything, and then immediately in maximum a minute they receive a QR code, and then they can trespass the borderline within the airports. We have our own method of payment in alliance with Visa. So we are also integrated with PayPal, with UnionPay, Alipay, MasterCard, Visa, and Google Pay, Apple Pay, etc. So we are offering a very customized experience and really quick, and using top-level technology, computer vision, biometrics to really secure all the data, because we are dealing with passports, so and many other data important for the business, not only for us, also for other partners. Banks are relevant partners for us for sure, because now they see many things, but they don't see what the people is buying and the context of the people when they're buying, if they're buying alone or with other people. So we are offering that kind of views to banks. Also, we have developed during the pandemic the first only mobile solution for e-commerce. Also, the solution is ready for as a SaaS, software as a service, for partners. Not only banks, but banks are really interesting for us to grow, to get capillarity across markets. This is the market. It's across. It is more than 50 billion euros market only in Europe. So these are the traditional models. We are there with only with refunded and fab tax. Now we are in Spain, France, Belgium, Italy, and especially operating in cross borders. That's why we have been able to, apart from the travel restrictions, we've been able to make some metrics in Andorra, in some cross borders, and we are really focused on mainly the British people, because as you know, is our main focus, because they're out of the fiscal area union. So this is the plan. We're trying to raise 5 million euros to really conquer Europe, and also try to get into other cross borders, like in Mexico with the United States and Singapore. And we are trying to get in 2025 almost 4 million app users, 25,000 merchants as partners, 1.28 million transactions, and 1.89 billion sales in stores. This is the team. People coming from the industry, from the monopoly, the global blue, and me as a serial entrepreneur coming from mobility. I was part of the founding team of My Taxi, and now here. So thank you very much.
Thank you, Antonio. Questions for Antonio?
Just from my end, one question. Just as a potential user of your app, once I get the refund, does that go straight into, say, my PayPal account, or straight into my bank account that I might have connected with it, or how does that integration work? Just curious.
Well, we have a Round wallet, so you can have the money in a Round wallet to use it in other operations. But it's if you want to get it on your PayPal account, it's really quick. Whenever you have everything reimbursed from us, you get your money immediately in your PayPal account.
All right, thank you.
Hey, quick one, just to understand this better. Are you integrating both at the retailers as well as with the kind of equivalent of the VAT machines in the airports?
No, here the thing is that we are in a very good momentum, because the regulation is moving forward from B2B2C to pure B2C. We have Belgium, we have France in next January. So that means that you don't need any kind of contract or collaboration with a retailer. So you don't need to recruit retailers, which is good for marketing purposes, but bad for if you're scaling up. Probably this is going to happen also in Spain, Italy in the coming year. But in the meantime, of course, in Spain, it's the first country we launched, so we need to recruit the retailers. And as you know, the retailers, this is a very profitable market. You get around 30% commission on the travel shopper. Every transaction is 30% commission. You don't see any kind of commission similar to this in any industry. So, but yeah, the thing is that in countries in which is B2B2C, you need to have agreements with the retailers. And the rest is, yes, in the airport, you have a specific machine, Diva in Spain, Pablo in France, Otello in Italy, etc. And you need to finally validate the QR code there. And then you get your money. You can get it in advance with us, or after that, But also, this is not necessary, We are also pushing forward also the regulatory change, because you can manage everything from the internet. But the governments prefer a hardware, a physical machine there, to have the illusion that they are controlling everything.
Got it. Thank you.
Great. Thank you so much, Antonio. Great presentation.
Thank you.
Next up, last but not least, is Transmart Digital, Dipti Kataria. Dipti?
So thank you, guys. Thank you so much. Rightly said, last but not the least. So Transmart Digital, we're building a neobank, and I'm sure this is going to be a question which is going to come later on in the Q&A. With the crowded market of India, why one more neobank? So it's not just a bank, it's a universal bank, and it's beyond banking is what we do. In terms of the opportunity, the fastest growing smartphone ecosystem is in India, with about 748 million smartphone users, with a population of 1.4 billion. India is not a country, it's a continent, and thereby in terms of opportunities, both from the opportunities and innovation, it's a huge market. Today, in terms of the digital space, how we look at evolving from here is basically to build a neobank to become a financial mall and a marketplace in future. How are we basically addressing the problems that exist in the market with the traditional banks, even in terms of the private sector banks, each one of them who do give you an internet banking, you have multiple banks, multiple apps, multiple logins, multiple passwords. So technically you have all your information which is scattered, cumbersome process, tiring customer service, complex banking experience because all you're getting is one size fits all, and you do not get real-time insights as far as your data is concerned. How Transmart is going to play a role in terms of challenging some of these is we are basically building a solution which is a next-gen platform with 3 core services: ability to store money, ability to move money, and access to credit. In terms of a seamless digital platform, we will be onboarding customers, managing relationships, and also ensuring we are enriching the customer engagement. The benefits certainly are a single view dashboard for all bank accounts, and in terms of form factor agnostic, whether it's in terms of touch, in terms of face, voice activation, real-time insights. Here, as far as we are concerned, our focus is in terms of DIY customer products, DIY solutions, ensuring that we are not spamming the customer account, we are customizing the products and solutions, and AI-powered virtual assistants. A lot of education in the form of blogs, in terms of videos, in terms of gaming is what is going to translate into a lot of financial education for banking products and services which fit the customer requirement. The MVP one that we are building has a virtual smart account. Again, as I said, a DIY dashboard, expense tracker, cash flow predictions, auto accounting and tax management. A smart debit and a credit card can basically take care of or also provide something which is a just-in-time credit or BNPL single statement for multiple users. At the same time, first time in the country, even the existing banks or the new banks have not been able to address is in terms of your subscriptions and utilities, which is more than banks only are able to attract 14% of that business, is what we bring it on the ecosystem. Digital payments with digital wallets, Android POS, online social media payments, tap and pay, QR, these are some of the digital payments. In terms of the target customers, 19 to 45, expect banking 24/7. Our TAM is 205 million. We're onboarding 3 million customers in the next 3 years. Go-to-market strategy, we have existing customer base and partnerships, and at the same time, inroads into some large relationships. Current alliances and partnerships with Lyra Technology already will bring in more than 16 million transactions, where we are launching a BQR, payments and loyalty, end of this month, Worldline with more than 10 million POS, and MasterCard sponsored 25,000 BQR rollout this month. Our journey so far from 2018 to 19, awarded the fastest growing payments company, acquired the portfolio of a PSU bank and an NBFC. We also inked a deal with a Canadian company for FinPass solutions. And at this point in time, we are on a beta testing on some of these POS solutions. A very impressive team with about 150 plus years of banking and technology, including the ex-CGM of RBI in terms of people from consultancy to banking to technology are all over here as a perfect blend in terms of the team. Income lines come from the existing business, from membership plans, and also in terms of advisory services in future. Competitive benchmarking, each of these have come in either in terms of focusing on one product or one segment. As far as we are concerned, as a universal bank, we will be looking at both the savings and the current account through the same platform. So thank you.
Questions for Dipti? Thank you, Dipti. Great presentation.
Yeah.
Any final questions for Dipti? Great. Well, with that, thank you so much, Dipti. And again, all of these presentations will be available, as well as all the other 50 plus companies that applied to present. I want to thank all the startups and entrepreneurs and founders for their time today, and as well as the panelists for their questions and feedback and for their time today. Thank you so much. Kellyanne, I'll hand it back over to you.
Thanks, Ken. Let me join in thanking both the entrepreneurs and the panelists for their presentations and their questions today. Now, I had prepared a whole bunch of questions for a roundtable discussion, but I'm conscious that we have a kind of a hard stop in about 8 minutes from now. So maybe just one question to both the panelists and the entrepreneurs, so we could kind of wrap it up. To the panelists, in addition to investing equity, what are usually the kind of partnerships and commercial relationships you look to establish with startups within your with your corporate mothership, so to speak? And to the entrepreneurs, what are the kind of partnerships that you are looking to see? What are you looking for in a corporate investor? So perhaps if we could start with Jaidev, for example.
Yeah, sure. Hey guys, for those who that don't know Capital One, we're a bank here in the US. Consumer banking, commercial banking, credit cards is a big line of business, auto, and we are I think the 6th or 7th largest bank in the US. But you know, one big focus for us has been technology. So we're the I think only kind of at scale bank that's 100% on cloud on AWS globally. And so a big part of what we do is look at the infrastructure that we have, technology infrastructure, and look at companies that can help us accelerate our front-end offerings and front-end journeys by updating our stack. And so we invest and partner kind of all the way from a base infrastructure where we look at, you know, new database technologies. You know, we were early investors in a company called Snowflake, if you've heard of those guys. But we also kind of go up the stack and look at fraud technologies, you know, partnering with companies that might help fraud for e-commerce merchants, for example, and partnering on the data front with them. We work with a company called Riskified. That's an Israeli company. But then also marketing tech, HR tech are a couple of big focus areas for us. You know, we work with a company called Code Signal that helps us understand engineering talent better. We've done a little bit of investment on the consumer-facing side, but you know, typically on the fintech consumer-facing side, it tends to be more tricky to partner. You know, we've discussed being able to share some of what we have in terms of assets, whether it's customers or capabilities, with those companies, with those fintech companies. Where we have seen more interesting partnership potentials is when we look at consumer companies that might be interesting to our customers. And so, you know, as you think about the spectrum of kind of offerings credit card companies have, for its customers, whether it's on the reward side or whether it's on the additional value side. We've invested in companies in that space, restaurant reservation platforms, for example, and other such things. We are very, very intrigued with the payments ecosystem and have invested pretty heavily in, the small business payment ecosystem. Most recently in a company called Melio. We think that ecosystem is big, and a lot of it is going to, continue to evolve here in the States and internationally. We are US centric, so the one aspect about our investments are we tend to invest in companies that we think would bring the solutions to the US over time. So while we've invested in companies that are based in Portugal, Israel, England, etc., those are all companies that have brought the solutions to the US. But I love the global perspective over here. Personally, I was born and brought up in India, so fully understand lending and the complexities of banking, etc., in developing countries.
Thank you, Jaidev. Perhaps we could follow up with Joop.
Yeah, sure. Let me add the Deutsche Bank perspective. So for those of you who don't know Deutsche, we are a global corporate investment bank with a retail presence in particular in Europe. So the part of partnership is really key for us. So we only invest if we do a partnership. So it's purely strategic investments. And let me repeat that once, since that is pretty important for us from a philosophy, from a corporate venture capital. So if we don't see a partnership in terms of using your product or helping your product to scale, we will not invest purely from a financial perspective. And that brings us well the part in, you will see things like a dedicated business development person. So every person of every portfolio company of ours, we have 23 portfolio companies, have a dedicated business development person from Deutsche Bank. That person helps to scale the solution within Deutsche Bank. And as said before, these can be technology solutions. This could be RegTech solutions, this could be enterprise solutions, this could be FinTech solutions, right? Helping them internally, but as well as helping them, the company, to scale. So next funding round, attracting new clients, all these couple of things is from our perspective important, since how we see corporate venture capital is there's a lot of money out there, but where we would like to invest is things where we have a partnership with a company, and secondly, we know as well all of you have a lot of choices in terms of going somewhere for capital. So we would like to provide that kind of add-on in terms of business development help from a Deutsche Bank, leveraging our global network.
All right, thank you, Joop. Russ, perhaps.
Yeah, I'll do the 2-second tour. So most folks are probably unfamiliar with SEI. We are a public company, and we focus on the investment management infrastructure for some of the largest banks globally. And we kind of I liken us to kind of the Intel inside, where it's nobody really knows our name, but we're kind of behind the curtain. So Wells Fargo is our largest client in the US market. HSBC is the largest client in the UK market. And our focus from a CVC perspective is really strategic first and foremost, and consistent with Jörg's comments, we're not looking for a financial return, although we're not going to invest in somebody who's about to drive off the cliff. We really want to make sure that we're investing in firms that are looking to really disrupt the industry. And that can come in a lot of different forms. That can come in either business model or technology perspectives, and really kind of redefining a space. We don't look for commercial opportunities out of the gate, because certain things may have a longer tail to them. They may be a Horizon 3 type of opportunity. So we're kind of making strategic bets from a future perspective that may pull SEI into a potential market, or change an existing market that we would come and operate in. At the same time, in all of that process, just like everybody else, we're going to come across opportunities that have potential near-term commercial viability, and we'll certainly partner with our line of business teams across the US and the UK and Ireland to facilitate something like that.
Thank you, Russ. And last but not least from the panelists, Osh.
Hey everyone. So I'm from Unicre Ventures. So Unicre Ventures is the corporate venture capital arm of Unicre. It's one of the biggest reinsurance player in the world. We are looking to invest in things that define the next generation of risk transfer business. Some of them we call it insurance, we call it risk transfer. I think this is a much broader theme. It's going beyond some of what we define today as insurance services. We just launched our new fund. We are managing a total about a bit more than $1 billion under management with 3 different funds. With our new funds, the focus for us is the areas of still insurtech. You know, we are still part of the insurtech ecosystem. We see what's happening there and we'll continue to support it. We are looking to invest in cyber technologies, looking to invest in climate, transportation, and basically figure out the way that some of those industries are looking to intersect with the world of insurance and figuring out some of those technologies that both can enable Unicre to come up with new type of products and or enabling the next generation clients of Unicre.
Thank you, Ash. And perhaps 1 or 2 of the entrepreneurs, if you would like to add your perspective on the matter onto what kind of partnerships and commercial relationships you would like to establish with corporates so that we could finish off. No volunteers? Okay. And Monia, go ahead.
Sure. Absolutely. I mean, you know, for us as a scaling startup, the relationships that are with corporate entities that are looking to expand across Africa is critical. I think it's not investment as much as just partnerships, and I think I heard that before. Is that that for us is important? Is how do we look at Africa as a longer term play? And you know, frankly speaking, this is the time to look at Africa. We're seeing a lot of action and activity there. So we'll be looking forward to partnering with institutions that have the same view.
Great. Sure. Anyone else?
Yeah, I would like to add, I think it's the distribution that basically drives such a partnership. We do have a lot of corporate venture capital on our cap table already, and the reason why we partnered up with them is to gain access to their customers. And this actually is a win-win model. Like we gain access to the customers, their customers gain access to our technology, so it's actually a win-win for all.
Thank you, Sandipan. And with that note, we could actually wrap it up. I'd like to thank once again every single one of the entrepreneurs pitching today. I'd like to thank my colleagues and partners from PitchBook, Ken and Valeria, for helping organize this, and Petra, who's behind the scenes doing the technical side. And I'd like to remind everyone that we are going to continue with our webinars and pitch sessions into the next year now. So stay tuned for the upcoming ones. And thank you very much all, and have a good day, afternoon or evening, wherever you might be in the world. Goodbye.
Hey, I just want to thank everyone for staying up late wherever you are as well, recognizing that this is a global crowd. So really interesting to hear from all of you all. Yeah.
And big thanks to the panelists.
Thank you.
Cheers. Yeah.
Bye.
Bye. Bye.